Hey guys, welcome back to Stacking Stocks and thank you for joining us today. We're back with more content from AMC, so let's get started. It's been a pretty busy month for AMC holders as waves of attacks and positive news articles are coming out more frequently. The discord being spread among ape investors is being met with bullish sentiment as apes have already prepared themselves for this end game. One such bullish piece of news was recently released by Adam Aron, who announced his next exclusive plan for AMC theaters. Are you ready for an experience like none other? One of AMC's biggest criticisms was its lack of expansion from traditional movies. But ever since this AMC saga began, Adam Aron has put the pedal to the metal. While Adam Aron continues to do what he can for AMC, new data analysis has also begun circulating. This data suggests that AMC has much more room to grow and should expect over a 100% boom in the near term. Well, we're going to start with June 2nd, the last time we all got excited. We woke up that day with a low $35 and we hit a high of $72 in the same day, not accounting for any naked shorts or shady shares we were able to circulate. Around 30 million shares were returned that caused the price action to move upwards. The 30 million shares returned caused more than a 100% boom. It took us about 2 days to see that 30 million number reflected in Ortex. Since then, we've gone down and up and down, and recently we've downtrended and bounced off a critical support line of $40. AMC recently reported third quarter results that, in our view, were at least decent, yet AMC stock didn't resist the bearish wave that followed and dipped in only 2 trading days. At this point, AMC investors, many of whom identify themselves simply as apes, have already become accustomed to seeing the movie theater operators' share price bounce around and test resistance. How will they react to the most recent move lower in AMC? The market reacted negatively to CEO Adam Aron's earnings call discussion about the sale of some of his personal AMC shares in the fourth quarter. Interestingly, none of it should have caught investors by surprise, as the transactions had already been disclosed at least 3 months ago. Yet on third quarter earnings day, AMC dipped 2% in after-hours trading as soon as the CEO began talking about the subject. We established that Mr. Aron filed to sell 1.25 million shares of AMC on November 9th, which will effectively leave him with a bit over 400,000 shares plus millions more issuable in the future. Then, half of the intended sale was promptly executed at a price of $40.53 per share. Of course, it's hard to tell whether the CEO's transaction has had any direct impact on AMC stock price. Considering that nearly 63 million shares trade hands every day, we doubt that Mr. Aron's transactions, representing around 1% of the average daily volume, can be blamed for the share price decline. But again, deflated sentiment might be at play here, even though a 67-year-old investor shedding some of his AMC position seems very reasonable. The other interesting development of late has been the sharp decline in AMC stock's popularity across the discussion boards. Even on earnings day, AMC failed to feature among the top 10 most discussed tickers on Wall Street bets, and then the number of mentions dropped sharply the next day. According to Ape Wisdom, AMC is now only the 12th most talked about stock on Reddit. What does this mean for the movie theater chain? This could be a concerning trend for apes, hodlers, and momentum traders. The SEC, for example, has found that the surge in GameStop stock in January was caused primarily by overwhelming popularity leading to a buying spree. AMC can likely only go to the moon if something similar happens to it. It will be interesting to see what happens next. Will AMC holders feel discouraged by the recent events? CEO transactions, stock dipping below $40 again? Or will they rally behind their cause once again and cause a bullish spark? Well, we certainly will soon find out. During the third quarter, the company saw revenue rise to $425.1 million from $62.9 million in the year-ago period, and food and beverage sales also surged to $265 million from $29 million in a year-ago period. Diluted EPS stands at negative 0.44 per share, and as operating costs outpaced its revenue, the company posted a loss of $224 million for the quarter. The good news is that AMC theaters have joined the crypto bandwagon, and the company's customers can make an online payment via Bitcoin, Ether, Bitcoin Cash, Litecoin, and Dogecoin is expected to be the next cryptocurrency to be added in the pipeline. At the end of the third quarter, AMC had more than $1.8 billion in liquidity, including cash and undrawn revolving credit lines. Aaron said the company does not anticipate having to borrow under those lines of credit in the next 12 months. This liquidity has allowed AMC to explore and incorporate new revenue streams. The company has already acquired new theater leases, begun to offer new content like concerts and sporting events, and is expanding into the popcorn retail business. But what's the future outlook of AMC Entertainment? Cinema and entertainment industry is a tricky business these days, especially after the COVID-19 pandemic. Even as the economy recovers now, AMC and other traditional movie theater chains will have to compete with streaming services as some movie releases either bypass theaters or are released online at the same time. Also, AMC didn't report encouraging revenues in the last 3 years prior to COVID-19, and net income barely crossed positive territory even in the years of 2016, 2017, and 2018. With some positive news of cryptocurrency being added to the foray and some negative news of CEO Aaron selling more than 1 million shares, the future of AMC looks dicey. Add to it the growing inclination towards online streaming like Netflix and increasing operating costs towards maintaining theaters, the future outlook seems to be bleaker than ever. However, we can't overlook the fact that AMC continues to make progress in its recovery from the adverse effects of the coronavirus pandemic. The company generates most of its revenue by bringing people together in large theaters to watch films. It all came to a halt at the pandemic onset when theaters temporarily shut down to the public. Fortunately, through prudent financial management, AMC survived the worst of the pandemic and strengthened the business one step at a time. Vaccines against COVID-19 are becoming more widely available, making people more comfortable visiting movie theaters. The trend, if it continues, could turn AMC's operating cash flow positive. The pace of losses is improving dramatically. In its most recent quarter, ended September 30th, AMC reported negative cash from operations of $114 million, compared to a loss of $356 million in the same quarter of last year. Interestingly, AMC runs its business with high operating leverage, meaning a significant chunk of its expenses is fixed. Consider the rents or leases on its movie theaters. AMC incurs that expense regardless of how the business performs. So while the doors were completely closed to guests, AMC still had to pay rent. In all, AMC's rent expense in the first 3 quarters of 2021 was $612 million. Meanwhile, revenue has totaled $728 million at the same time. Having a large portion of your cost structure fixed harms a business when revenue is declining. However, the high fixed cost system benefits a business when sales increase. That's because while sales are growing, your costs are staying relatively flat, and the difference starts to increase profits. That's happening to AMC right now. The onset of the pandemic crushed AMC's revenue and with it, profits and cash flow. Now with its business recovering, profits and cash flow could bounce back. Keep in mind that AMC is in a pretty big hole, so it could take multiple quarters of significant improvement to dig itself out. Still, the positive trend has AMC's CFO Sean Goodman confident that the company could generate positive cash flow from operations in the fourth quarter. We know that sometimes stocks can go up after bad news and go down on good news. That's just what AMC stock has been going through. Looking over the company's November 8th third quarter earnings release and transcript, there was actually quite a bit of good news for the company. So there's still potential for the stock to boom. We hope you guys enjoyed today's video. Remember to hit the like, share, and subscribe button. See you next time right here on Stacking Stocks.